we're going to get more analysis on this and other interesting macro issues. Geoff Wood of Morphic Asset Management, Head of Risk there, joins me live from our CBD studio. Geoff, thanks very much for joining us.
Afternoon, Helen.
Now, the Trump tax overhaul, where the speech tonight, the president will be unveiling, the outline of the Republican, their proposed tax plan. But healthcare reform has again been sort of, it's fallen in a heap.
Correct. Yeah, that's been ditched. I mean, there's been so many goes at it this year. I think the most positive thing we can take out of it is that we can now move on to tax reform, which from a market perspective is a lot more important.
Yeah, so do you think he will be able to get this up, or what are your expectations of this?
Yeah, I think ultimately he's going to get this deal done. I mean, he starts from quite a good point in that the market's seen so many failures on the healthcare side that they're probably discounting it to some extent. But he recently did a deal with the Democrats on getting the debt ceiling extended, and it looks like he's in a decent position to get this done, in that the Republicans have come together to get a view that they largely agree with, and Trump himself has gone in and forced some concessions that he knows that the Democrats will like.
Yeah, so I mean, what does it actually include? We know there's a big drop down for the corporates. Just take us through what it's supposed to include.
Yeah, so on the corporate side, as you mentioned, the tax rate will go from 35 to 20. That's what's rumoured at the moment. And we've had this big issue over the last sort of decade or so, where US corporates, they only get taxed on their offshore earnings when they bring it back into the US. So what you've got is a lot of companies with large dollar asset holdings offshore that are just sat there, essentially trying to procrastinate on paying tax. So Trump wants to get those dollars back home. He wants to get that put into local capital expenditure. So he's going to be offering a one-time tax fee on those redemptions as they come back on shore, to incentivize that money to come back. So they're the two big things on the corporate side. And on the personal side, 7 tax brackets reduced down to 3, and he'll be trying to argue that everyone's paying a lower tax, particularly the lower to middle class.
All right, but the lowest tax rate is going to increase a bit?
Yeah, that's right. So it's a bit complicated. I mean, for your average bystander, it doesn't really make sense how by the tax bracket for the lowest income group is going to go from 10 to 12
percent. Yeah,
10 to 12%. But he'll be increasing the amount of deductions that you can count against your tax. So it has to be seen whether that's actually effective, and whether your average guy who's on a low income actually can claim these deductions.
Yeah, and so of course, because he's trying to make out as if it's fair to everyone.
Yeah.
Is there much detailed analysis yet on whether it is actually just helping wealthier Americans?
Well, one thing he's done, which is pretty clever, is he said he's going to lower the upper tax bracket from 39 to 35, but he's going to leave it open to Congress or to the various parties, and by that he means the Democrats, to say, should we actually charge a larger amount on the upper one? So he's kind of washing his hands in that regard on that side. But generally, if you look across the board, it's tax cuts, nearly everywhere, and the big question is, how's he going to actually pay for this? All
right, have we got an answer yet? Because details are pretty vague, aren't they?
Yeah, they are very vague. I mean, the way it works is if you can't prove that this is budget neutral, then after 10 years they essentially expire. So that'll be.
So what does that mean?
Well, you can't put in place long-term tax plans like this if they aren't actually tax neutral, i.e. you aren't coming up with a method to offset the tax cuts somewhere else, which at this stage he hasn't.
Yeah, okay. So what are the sort of market implications of this? Because, of course, we've, it's been backwards and forwards even since before he was elected, but as to whether this would happen, and we've seen markets take off, partly in anticipation that it would happen, wanting it to happen. What will be the market implications of this?
Yeah, I mean, you've got to put your hands up and say it's quite hard to say exactly what's in the price. I mean, we've been tussling this back and forward for 12 months. In that time, you've had big upgrades on earnings for a lot of the corporates inside the US. We've had a sort of less inflationary backdrop, which means lower yields, which have been good for stocks. And then we've had North Korea washing backwards and forwards lately. So it's quite hard to say exactly what's in the price. I mean, a lot of these numbers, like the 35 to 20 cut, has been sort of dribbled out over the last sort of 24 hours, and markets haven't really reacted. But I'd say on net, if he can get it through, then over the balance of the year, it will be a positive tailwind for company earnings.
All right, and therefore positive for markets?
Positive for markets, yeah, and in the short term, you could see a bit of a respite for the US dollar, which has basically been getting sold all year long. It's down around about 10% on a weighted basis.
Yep.
So the market at the moment is buying back some of those dollars that they've got probably a bit too short.
All right, and Geoff, just briefly, are you watching oil very closely? And where do you
Yeah.
think that's going to end up?
This is a fascinating one. I mean, sometimes you got to look at markets and say what are the consensus views out there, and one of them is that oil is going to be in this $40 to $60 range forever, and that's built into airline prices, it's built into inflationary forecasts, etc. Now that we're bumping up against 60, there's a few little telltale signs that it actually could crack to the upside. So this is one where we'll react to, and if we see it go through 60, it could have some decent market implications.
All right, Geoff Wood from Morphic Asset Management, great to talk to you. Thank you.
Thanks, Helen.